Have you ever hit a money milestone and thought, finally, I can breathe? Like you finally crossed $50,000 saved. Or you landed the job that pays $80,000 a year. And you genuinely believed this was the moment your money stress would just disappear. Then a few months go by, life happens, and somehow you're still checking your bank balance before you go out to dinner. You're still doing mental math at the grocery store. You're still tense. So here is the real question. What is the number where money stops feeling like a constant background threat? For a lot of people, the first major psychological shift happens around $100,000 in liquid savings. Not because it makes you rich. It doesn't, but because it changes your relationship with uncertainty. Now, quick disclaimer, this is not a magic number for every single person, every country, or every lifestyle. If your monthly expenses are high, your number might be higher. If you live a leaner life, it might be lower. But the pattern is real. There are financial thresholds where your stress levels drop sharply. Most financial advice treats money like it's linear, as if $2,000 is exactly twice as good as $1,000 and $10,000 is 10 times better. But money doesn't work like that in real life. It works in thresholds. There are points where the same extra dollar suddenly buys you something completely different. Less fear, more options, more calm. Let's start with the simplest reason $100,000 feels different. It's the first time most people have a real, durable emergency buffer. Because the typical emergency fund story goes like this: you save up $5,000, maybe $10,000. You feel incredibly proud. Then your car needs a $3,000 repair. Your laptop dies. That's another $1,500. And suddenly your emergency fund is basically gone. Now you're back on this treadmill. Rebuild it. Get hit again. Rebuild it. Get hit again. You're being responsible, but you never actually get ahead of the curve. When you have $100,000, those same surprises become annoying, not catastrophic. A $3,000 repair is 3% of your savings, not 30% or 60%. Your brain stops treating every unexpected expense like an incoming disaster. That's the first big shift. The emergencies stop feeling like threats to your actual identity. The second shift, you stop making decisions based on fear. When you're low on savings, every single move feels dangerous. Negotiate a raise? What if I annoy my boss and lose my job? Try a side hustle? I can't risk the startup cost. Switch roles for better long-term growth? It's just too scary right now. That fear quietly traps people in mediocre decisions for years. Not because they're lazy. Because they're financially cornered. The $100,000 buys you runway. If something doesn't work out, you can survive the gap without immediate panic. You can take your time to interview properly. You can say no to nonsense job offers. You can choose a long-term strategy over short-term survival. This is what people really mean when they say money buys freedom. It's not about yachts. It's not about luxury. It's about having choices. There is another part of this that people don't talk about enough: the mental energy that money stress consumes. When you're financially tight, your brain runs these background calculations all day long. Can I afford this? What's my balance right now? How many days until I get paid? If I buy this, what do I have to sacrifice later? That constant mental noise is absolutely exhausting. And research has shown that a state of scarcity actually reduces your cognitive bandwidth. This means you literally make worse decisions when you're under constant financial stress. Crossing that $100,000 line helps to quiet that noise, freeing up your mind to focus on more important things. Let's be real. If you're struggling to save $10,000 right now, $100,000 probably sounds ridiculous. Impossible, even. But here's the truth. You don't stumble into $100,000 by accident. You don't get there by just skipping lattes for a couple of months. To reach that level, you are forced to become a different type of person financially. You build the habit of living below your means, consistently. You learn to stop lifestyle creep dead in its tracks. You get serious about growing your income, not just cutting your expenses. The goal itself changes you. And that's the entire point. Here's a mindset shift that kicks in hard around this level. You finally, truly understand that being rich is about income, but being wealthy is about assets. You can earn $200,000 a year and still feel trapped if you spend all of it. On the other hand, you can earn $70,000 a year and have more peace of mind if you've built real savings and investments. Wealth isn't what you flash around. It's what you keep. Investing feels terrifying when your account is small because every little market drop feels deeply personal. If you invest $5,000 and the market drops 10%, That's a $500 loss. It hurts because it feels like you're losing precious progress. With $100,000 invested, a 10% drop is $10,000. It looks bigger on paper, sure. But you aren't forced into panic selling because you have that cushion. You can think in years, not weeks. And that calm during volatility is one of the biggest wealth builders on earth. And here's where it gets really exciting. At $100,000, the power of compounding stops being a theory in a textbook and starts being noticeable. A 10% annual return on $5,000 is $500. Nice, but not life-changing. A 10% return on $100,000 is $10,000. That's real money. For some people, that's a year of rent. That's school fees. That's a major life option. It's the moment your money starts working as a powerful second engine for you. When you have no savings, your job becomes purely about survival. You tolerate bad bosses, toxic cultures, and unethical demands. Why? Because you can't afford to miss a single paycheck. But with a strong cash buffer, you can make career decisions from a position of strength. You can refuse to do work that goes against your values. You can take the time to find the right role for your future. You can invest in skills that will pay off down the line. The money itself isn't the freedom. The options it creates are the freedom. Now, for the hard truth. Most people will never hit $100,000 in liquid savings. Not because they can't, but because they don't stay consistent long enough to become the type of person who does. They upgrade their lifestyles the moment their income rises. They finance status symbols. They just drift along. But if you commit to this goal, your life changes in ways that people don't often talk about. Less anxiety, better decisions, healthier relationships, and more powerful career options. You sleep differently. You think differently. You live differently. And that's why the first $100,000 is a real line in the sand. So what's the path? It's not complicated, but it is hard. First, you must spend less than you earn. Second, automate your savings before you can even touch the money. Third, build a real emergency buffer first, so life surprises don't derail you. Fourth, invest consistently in boring diversified funds. Fifth, actively increase your income through skill building and strategic career moves. And sixth, fight lifestyle inflation like it's a disease. You repeat that process for years. And then one day, you'll check your accounts and realize you've crossed it. And your relationship with money will never feel the same ever again. If this resonates with you, comment 100K down below and tell me where you are on this journey. And if you're serious about building financial freedom the pragmatic way, make sure to subscribe. I'm going to keep this channel focused on real-world decisions, not fantasy finance. Thanks for watching.